And today's December 17th, 2014. This is your supplemental market update. Just wanted to show you what we're looking at when it comes to what's going on in the market. And so this is our New York Stock Exchange Composite Index, which is what we use to determine whether the market's going up and down. You can see it's all over the place here. Up, then down, then up, then down. Right now it's down. And a couple of things we want to point out to you. When you get a preponderance of red arrows on the screen, that's what creates the red market. So we have the market moving below the standard deviations and the moving averages and moving decidedly below on volume. StockTradeGenius indicator is also moving down here below the zero line, and that's all negative. So that's bad stuff. Now, I want to show you kind of what we've pointed out in the past, what happens when we get to these what we call inflection points of these envelopes. So at this inflection point, if you can see this little dotted line right here, that's a standard deviation envelope. And we've found in 20 years of research on this New York Stock Exchange Composite Index that when it gets to these inflection points, these boundaries on the envelope, things tend to reverse. So you'll see this kind of tightened up right in here and it reversed. Then it tried to go back up and hit it again and it reversed pretty severely. And now you can see it at this side. Now this is indicating that it's a reversal, and it hit yesterday pretty dead on the close. And today it's reversing up. And of course we're waiting for the Fed minutes today, so that always throws a little wrench in the works. I don't think we're going to see much out of them, but we may. But that's what keeping the markets fairly quiet. Right now the Dow Jones is up 121 points, and the composite on the NASDAQ is up 32 points. And so that's up about 0.7%. So it's having a blow-off day. It blew down these last 7 of 8 days, and then now it's got to have one of these capitulation or dead cat bounce days so that it can get some of that back. A lot of bottom fishing going out here, but I'm not sure this is going to last. We think this is a lot more likely to be testing this area down here from October 15th than it is to go back up and test this area. But that's why we watch it every day, and it could change tomorrow. But we're trying to trade the trends, and we try to let you know when those trends change. So you see this trend changed here a few days ago, and we told you the market was red. We warned you up here in the yellow condition that it was time to start getting out of your long positions, and we turned out to be right. It's not all about being right. It's about trying to catch the trend and making money. We don't care about being right as long as we can make money, right? Finally, let's take a look at the Genius indicator. You can see it broke through the zero line. It's headed down, but now because of today's action and a little bit of yesterday's action, it's trying to go up. Now we'll see if that continues or if this is just one of these types of things like over here and it's part of a longer trending down pattern. But the Genius indicator has been very, very accurate, and you can see the volatility has started to increase. And so we call that porpoising, when a porpoise comes up and then goes back down, goes back up. And that volatility leads to big moves in the market. Great for traders because we can make money, but you also have to be ready to get out and not get emotional and get married to your stocks. So the market's red, but we're watching it today. And at these inflection points, we tend not to do a lot of trading. We might do some hedging, which means we may go long a position, may go short a weak position. And we are certainly on that today with the price line position on the short side and Alibaba and Taser positions on the long side. But generally, that's not a full position. It's just to keep our feet wet in the market and see if we can take advantage. Anyway, stay in cash if that's too scary for you. And don't get too excited about being a hero today because we don't know which way the market's going to go because it's coming off an inflection point.